Hello and welcome to another update video about ADA. ADA has only been moving sideways really for the last few weeks, actually nearly for the last month or so. We've seen after the low was formed on the 13th of April, a three-wave corrective rally, a three-wave pullback. This also looks like a corrective mess, yeah. So you see all this up and down, really corrective and messy price action. And therefore I'm tracking still this triangle. So the Elliott wave structures that we discussed in the previous video, they are all still valid and they are all still on the table. ADA leaves all options on the table. Basically, I think to try to keep it as simple as possible, first of all, let's zoom out and let's take a look at the structure. We have a structure that gives us a 5-wave increase into the, what was that, one second? So into the March highs, okay, where the price topped at around 82 cents in wave 1. That's been the narrative for the last couple of months now. Yeah, originally I wanted to see another high here to get a more extended and healthy wave 5, but it is already okay. And the wave 2 is currently still unfolding most likely. So we have dipped into the support area. That's still an unchanged support zone in wave 2, defined between 29 cents and 49 cents. And here we have the key support at 29 cents, which is the 78.6 retracement level. And this is, as you might know or remember from previous updates, the level that in any wave 2 pullback, we don't want the price to get below, because it indicates weakness and it would not be typical for a wave 2 to go below that level. Now that's not an invalidation point, therefore we've got the invalidation point down here. It's at around 22 cents, and yeah, 22 cents is the critical level. That's black and white. If we go below that level, any bullish thesis has to be revised, and there is no bullish thesis anymore. Well, there might be a new one, but then the market has to prove itself again. So the problem is, if we break below that level, all the work that the bulls did from that swing low in June last year, oh, it's raining, from June last year, and actually that rain outside reminds me of this chart. It's pretty sad. I mean, it's just you know that, when you look at this chart, I mean, there is some potential there. I don't know, it just needs to prove it, it needs to turn around in this yellow box. I mean, many coins are forming a similar structure at the moment, like a lot of these legacy coins. Someone recently called them boomer coins, which I don't know, I don't fully agree with. But yeah, I mean, they did already, form a nice 5-wave move up, and we rallied. We shouldn't forget that ADA also rallied from around about 20 cents to 80 cents. That's pretty decent, yeah. Now we're just correcting this move, but there's now an area where the price really needs to reverse and needs to deliver, okay. But I cannot rule out one more low. Actually, the structure would suggest one more low. Let's zoom in, go to the 1 hour time frame. We've got on the chart in this wave 2 a few potentials. So actually two, I would say. There's two scenarios. There's one scenario, which is the white count, in which we're dealing with an A, B, C structure to the downside, and the C wave is wave 1, wave 2, wave 3. Okay, the wave 4 could be a triangle, and then one more low in wave 5. So that's sort of what I'd like to see, 5 waves down in wave C. At the moment, we only have 3 waves down, so it could always have formed a low, maybe as a WXY structure, but then the problem is, if that's the case, the move up is currently not convincing. So, a dip into the support would have been fine. I could agree that maybe the low is in, but then the chart needs to give me a little bit more upside momentum. There really hasn't been enough upside momentum. We haven't even left the support region to the upside. And interestingly, we've now arrived at the trend line. I mean, yeah, I could draw that trend line maybe a little bit more accurately, but there is a trend line that we can watch. Link broke above its trend line already. I don't use these trend lines too much. A bit subjective. You could even draw it like that, then it's quite far away still. So I don't use them too often, and I don't use them primarily for the analysis, but still pay attention to that trend line. It could be that we consolidate below that trend line for a little while, actually. We have here in the white count a triangle pattern as wave 4. The condition here is that the price needs to stay below the 52.3 cent level. That's the A wave high of the triangle. Any break above it will indicate that the orange count has a chance. Yeah, orange is the breakout count, but it tells us that we need to see 5 waves to like 65 cents, the 1.618 extension, to suggest that this is actually what's unfolding. The orange count also indicates it can only be a diagonal pattern, especially as this would now be a third wave up here, but there's just nothing exciting about this at the moment. And the third wave is typically quite strong, so I don't see any evidence for that other than a bit of a hopium count, that is, yeah. And it also, the yellow count is here to remind us that after 3 waves, it can always fail, all right, and that would be a high B wave. But therefore I say really only 2 potentials, because let's first see if we can break out, and then it's between orange and yellow. At the moment, I think the white count, like a sideways consolidation pattern, seems to be in control. And if there is one more low, then we have support at around 36 to 38 cents, which are the next Fibonacci support levels down there. That's my update about ADA. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.